What if I told you that every dollar in your pocket, every pound, euro, or yen doesn't really belong to your country? That behind every central bank, every financial policy, every market correction, there's an invisible cartel deciding what money is actually worth. We grow up believing that currencies are backed by governments, that value comes from productivity, trade, or gold. But what if I told you that was only the cover story? Because hidden behind the institutions we trust, the Federal Reserve, the European Central Bank, the IMF, the World Bank, lies a network so intertwined, so powerful, that it can quietly raise or destroy entire economies with the stroke of a digital pen. This isn't fiction. It's the quiet truth behind how modern money is manufactured, controlled, and weaponized. Today, we uncover the hidden cartel that owns the value of every currency. Our story begins centuries ago, long before Wall Street, before digital finance, even before the modern nation-state. In the 1600s, gold and silver ruled the world. Real money had weight, and value came from scarcity. But merchants and monarchs had a problem. Wars were expensive, and treasure was heavy. So they created paper promises, IOUs, that represented real gold stored in vaults. At first, it was convenient. Then, it became dangerous, because the people holding the gold realized something extraordinary: they didn't need to actually have gold to issue notes, they only needed trust. In 1694, this idea became institutionalized with the creation of the Bank of England, the first central bank to issue notes not fully backed by gold. It was a revolution. The government got to borrow endlessly, the bankers got to charge interest on money they didn't physically have, and the public got the illusion of stability. The foundation was set. Whoever could control credit could control nations. Fast forward to the early 20th century. The world is industrializing, trade is booming, and money is flowing like never before. But with growth came instability. Markets crashed, empires collapsed, and war debts mounted. In 1913, the United States created the Federal Reserve System, a public-private central bank supposedly designed to stabilize the economy. But its real power went far beyond printing dollars. The Federal Reserve could now control interest rates, dictate the flow of money, and decide when to inflate or deflate the economy, effectively steering the entire financial system. The same model spread globally. The Bank for International Settlements, BIS, was founded in 1930, quietly becoming the central bank of central banks. It was headquartered in Basel, Switzerland, outside national jurisdiction, protected by international law, and completely opaque to public oversight. Through the BIS, a small group of financial elites could coordinate currency policies across the world, ensuring that money supply, debt creation, and exchange rates served their interests, not necessarily the people's. This was no longer capitalism, it was coordination. A cartel of central banks deciding the fate of nations. Everything changed in 1971. For centuries, currencies had been linked at least partially to gold. That connection kept governments from printing unlimited money. But under President Richard Nixon, the United States ended the gold standard, severing the dollar's link to real value. From that moment, money became pure belief, backed not by gold, but by debt. And with that one move, the cartel's power became absolute. Because when money equals debt, every printed dollar creates interest owed to the very institutions that issue it. The world's wealthiest nations became addicted to borrowing. Governments printed to survive, banks lent to expand, and citizens were left chasing a constantly devaluing currency. From 1971 onward, global debt exploded, growing faster than population, productivity, or trade. The result? A system that must grow to exist, even if that means printing value out of thin air. By the 1990s and 2000s, the hidden cartel's influence was everywhere. Every major currency was now fiat unbacked and centrally controlled. The IMF and World Bank used loans to dictate policy in developing nations. Countries that refused the terms faced sanctions, currency collapse, or financial isolation. Behind the scenes, multinational banks, hedge funds, and credit rating agencies reinforce the same system, rewarding nations that borrowed more and punishing those that didn't got it tea. And when crises hit, like in 2008, the cartel didn't lose power. It expanded it. Trillions were printed in bailouts and quantitative easing. Interest rates dropped to near zero, and the global elite bought real assets with fake money property, corporations, even farmland. Ordinary citizens, meanwhile, watched their savings lose value while asset prices soared out of reach. The result was a silent transfer of wealth from the public to the financial few, a process still unfolding today. Politicians promised reform, more transparency, accountability, digital modernization. But every so-called fix only deepened dependence on the same structure. Today, central banks are pushing central bank digital currencies, CBDCs, programmable money that can track, expire, or even be restricted based on behavior. They're sold as innovation. But behind the curtain, it's the same cartel just with more control. Because digital money gives them not just power over value, but over access. If the same network that manipulates currency can also monitor every transaction, the next phase of control isn't financial, it's total. Let's look at the numbers. Global debt has surpassed $315 trillion, over 3 times the world's GDP. Only 10 institutions hold or influence the majority of central banking reserves worldwide. Over 60% of global trade still depends on the US dollar even though it's backed by nothing. And yet, every major economic collapse from 2008 to the 2020 pandemic response ended the same way with more debt, more centralization, and more control for the few. It's not chaos, it's design. Because in a system where money equals control, those who issue money will always win no matter how many times the game resets. History shows a cycle: create credit, expand debt, trigger crisis, consolidate power, repeat. This pattern has played out since the Bank of England, through the Federal Reserve, the BIS, and now into digital currencies. The faces change. The mechanism doesn't. Every solution to the previous crisis simply sets the stage for the next one, but with fewer players and tighter control. It's not a conspiracy theory. It's the architecture of modern finance visible to anyone willing to connect the dots. Money is no longer a store of value, it's a tool of influence. Whoever controls money, supply controls behavior, policy, and even perception of reality. Every major currency today is part of a coordinated system. Nations may compete publicly, but financially, they operate under the same central banking framework. The next evolution, digital currency, will not free the system, it will perfect it. The real threat isn't hyperinflation or debt or digital cash, it's dependence. Because when value itself is artificial, freedom becomes conditional. Every empire in history has fallen when money lost meaning. And today, we're watching the same story unfold not in gold coins or paper notes, but in code and credit. The question isn't when the system breaks. It's who will rebuild it and under whose control. If this opened your eyes, don't stop here. Learn how money really works, who controls it, and how to protect your financial freedom. Subscribe to Finance Mindset, because understanding money isn't just power anymore, it's survival.